Good morning, everyone. Welcome to our Tuesday morning trading room. So yesterday, quite the session. The market performing pretty much as we anticipated. Early on, we got the rally. Things settled into a little bit of a sideways fashion through the lunch hour, and then a rally going into the close. So overall, a fairly bullish day. The Asian session and European sessions relatively quiet in that they didn't make any significant gains higher or lower, just kind of retraced where the market left off. Did make a little bit of an overnight high here near the 69.60 zone. And here we are kind of in the middle of it all again. I see there's a few new names in the room here this morning, so let me extend a welcome to you and give you a really quick overview of what you're looking at here. So we've got the complete diversified trading system up. I've got the Hawk Scalper here in the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor, of course, here in the bottom right. I'm following the NASDAQ on this monitor. I've also got the Russell and crude oil up on my other monitor. But please don't be shy about requesting a market if there's something you'd like to see. If I have it in my data mix, I will certainly pull it up for you. And of course, if you have any questions, don't be shy. That's what I'm here for. All right, so we're just a few minutes into the session, kind of letting the early dust settle. Before I get too excited about buying the market or selling the market, as the case may be. Little Freudian slip there. Market seems to be on a tear. All right, so we definitely have a little bit of a sideways drift going on right now. Not really a very active opening few minutes. We'll see here in a moment whether if the buyers can't muster a rally, we're going to see a little bit of a failure here. We're right up against the median line in our support and resistance suite, and that's kind of holding the market. I'm also wondering whether this little bit of a rally that we're looking at is going to turn into a bit of a bear flag, in which case we're going to see the market reverse and try to head lower. All right, well, we'll put that on the shelf for now. Dan's asking, do you run your charts at 24/5? Yes, I do. So if you go to your data series, the session template default 24/5, that's actually the one that the programmers recommend to keep the indicators running smoothly. The only real difference between the default 24/5 and the 24/7, there are a few hours of electronic trading very early, or pardon me, very late on Sunday, just before the electronic markets open Monday morning. But those couple hours might even be enough to skew your support and resistance suite numbers. As Dan has just realized, he says, thanks, that brought my support and resistance lines in sync with yours. Now, the difference should not be significant, and you need to treat these lines as more as zones than absolutes. Although it's amazing how often the market will hit a number, hit a line pretty much on the number, and then react accordingly. Yesterday was a really good example. Tagged it, or got close to tagging it there, tagged it here, fudged it by a tick or two. Well, we have a bit of a congested market, to be sure. For those of you who like your first in-sync eagle signal, well, that came right here on the open, or a moment or two after the open. So the eagle, very bullish, looks like it's going to try to retest the overnight high. The falcon producing a late filter entry signal. The hawk is still a little bit of a jumbled mess. The raptor right out of the open also gave us our cloud crossover signal, which, by the way, has found its profit objective. And it looks as though they're going to continue to press a little bit higher here. At least that's the impression we're getting right now. All right, fairly decent follow through on that. So I would say we're still in a full-on bull market. May have to wait a little bit for a good opportunity, however. Well, there's not much to talk about when the market's like this. What I'm looking for is either a pullback to the hard edge to give me another buying opportunity, or a test of the high and a failure, which will give me a counter trend signal. Oh, wow. There they go. Yeah, like Steve says, at this rate, we'll hit 7,000 today. Well, I guess I shouldn't have been sitting on my hands right out of the gate. I could be on hold here for a little bit. Julian says I didn't get in either. Oops. I know. Oh well. It's not the first move I've missed, and I'm certain it won't be the last. And they just keep pushing to new highs. Doggone it. Oh well. Like I said, there's not much I can do with it right now. I don't feel, even though the market is in an uptrend and it's very likely to continue higher, if your account allows, if you're trading a really big account, go ahead, just hit your buy market button and buy in. The problem for me is, sure, I'm getting some follow-up signals. I could buy in here, but where am I going to place my stop? Right? I can't put it here. It's too tight. I can't put it here. It's too tight. If the market reverses, it's at least going to go to the hard edge. And even the low of the morning would be kind of within this last rally phase. Now we're starting to get to an area where it's just going to be out of reach for me. So the direction, not as big a concern for me right now as the actual structure of the trade. We're probably not going to generate a sell signal here, but we're getting a really, really quick little retest of the extreme here. If the market reverses and takes out these lows somewhere here around the 69.55 area, I think we could see a reversal. The Falcon actually producing a double dot signal. Now, I don't point this one out to you very often because it is counter trend, and we really don't want to be focusing on counter trend signals so much. With the double dot signal, the important thing about the double dot signal is that you're able to tie it in with a reactionary point in recent history. So right here, we've got the overnight highs, which is where we're at right now. The Falcon starts to produce double dots and essentially gives you a counter trend signal. Now, a double dot, here we actually have two series of triple dots. So we've got selling dots in an uptrend, selling dots in an uptrend. And we actually produced the signal to sell. Like I say, this is fairly aggressive because it is counter trend. And with counter trend signals, well, we're trading off the smaller risk, the certainty of knowing if the market trades above these highs, we're 99% sure we're going to be on the wrong side of the market for the lower probability of a successful trade. Now the Falcon also starting to build a proper trend change signal, which is why you don't want to be too quick with your stops on these counter trend signals. And counter trend signals, like I say, their very nature makes them a lot more risky. Ouch. Well, see, there you go with a counter trend. That's the risk of a counter trend trade. Always works that way. So when you're looking counter trend, be prepared. There's going to be that trade-off. Hey, way to go, Bayard. Bayard says, still practicing on fake money, but made $465. Exciting. Way to go. Good for you. Good job. Folks, if you can do it in sim, you can do it in real life as well. Keith asked, do you think it could have something to do with the shutdown being lifted? The market has really been going since then. Yes, I think that certainly has eased some market fears. But I'm sorry, I was trying to do too many things here at once. But the fundamental information is always tricky, right? Because the markets do what the markets do, and then the reporters scramble around trying to figure out why the markets did what they did. So fundamentals are useful sometimes in the aspect for getting a general tone on the marketplace, particularly so in some of the commodities and stocks that deal with actual production, versus index markets. If you're following the soybean market, well, you're going to be interested in the North American harvest, the Brazilian harvest, growing conditions, that kind of thing. And you're going to try to get an overall feel for the market. The news, however, can be very misleading. And I'm not a conspiracy theorist, but many would say the news is deliberately misleading by market makers and people in the know. A fellow by the name of Richard Ney, many years ago, wrote a book called The Wall Street Game. And that was his premise, that about market manipulation by the insiders and how they use news as a means of disinformation to the general public. And in case you think he was a conspiracy nut and just full of hot air, you should know that he called the market top not once, not twice, but 3 times. So from his writings, I've kind of taken the impression if the news is good, well, then you want to get ready to short. And if the news is bad, then you want to get ready to buy. So it looks like I had the right idea here. Stops just a little bit too tight. as the market did a little hiccup before heading lower. Okay, Prasanth here is asking, good morning, Eric. I'm a chicken and pulling the trigger when it comes to real monies. Still keep to sim account many times due to it. Okay, this is a common problem. And here is the best solution that I have come up with so far. It's actually a two-part solution. It's very common to be apprehensive when you see a signal. Let's go here to the hawk for the second. Okay, we've got a first micro macro cross signal to sell. It's just natural to be apprehensive when it comes to placing real money on the line. After all, it is your hard-earned money. The best way around that is you have to gain confidence with your signals. I can sit here all day long and tell you what a great signal the hawk first micro macro cross is. But until you do the homework and actually go through your chart and find all your first micro macro cross signals and prove to yourself that they follow through at least enough to hit the high probability profit target, you're never going to have the confidence to take the signal. Right? These are all first micro macro cross signals that I'm highlighting, and you can see that every single one of them has found its profit objective. So what is that, 5 or 6 signals that all worked out? That's pretty good odds. Right? If you're a Raptor trader, you need to do the same thing. I know there's many new Raptor traders in the room. You need to go through your chart and you need to find your signals, your number 1 signals, your number 2 signals, and you need to see, did it find its high probability profit objective? Where did I need to place my stop in order for that trade to make its profit target? Again, I can sit here all day and I can tell you how great the signals are, but if you don't have the confidence, you're not going to take the signal when it develops. Okay, so that's item number 1. You have to do your homework. I can't do it for you. You have to do it. Item number 2 is you need to be able to risk an amount that you are comfortable with. All right, I can tell you that this is how I would set up the trade, but if you're not comfortable with this amount, then you have 2 choices. You either select an amount that you are comfortable with, or you pass on the trade. And it's okay to pass on the trade. That is all right. You have to trade based on your account size. If you're trading a $10,000 account, you're going to trade it a whole lot differently than if you're trading a $100,000 account. But you have to be comfortable with this amount. Don't make the mistake of thinking, oh, well, I can't afford very much. I'm going to place my stops right there. Because even though it'll work out sometimes, many times you're going to end up getting stopped out prematurely, only to watch the market go on without you. And a stop loss is never a loss if it doesn't get hit, right? This is a much better stop loss than this. Even though the bigger stop loss is 5 times as much money at risk, the bigger stop loss never got hit, did it? I know, some of these things are like, duh, of course it didn't get hit, Eric. But you'd be surprised, or maybe you wouldn't be surprised, how many times people trade like this and they think, oh, I'm being smart because I've only got, you know, $45, $50, $60 at risk and I'm making $100. Yeah. I'm making twice as much as I have at risk. That's what everybody says I should do. And then the market brings them in and it stops them out, and they say, oh, what went wrong? What did I do wrong? Oh, I get another signal. Okay, let's do it again. And they set it up the same way, and then they get tagged out again. And so on it goes until, you know, they blow up their account and they get very, very frustrated. So you need to be able to set a stop, a reasonable stop, and you need to be comfortable with this amount. You need to be able to walk away from that amount. And it's not, I used to say it's like a gambler's mentality. You know, if you sat down at a poker table in Las Vegas, this is your ante. This is the money that you put down. That's your bet. If you don't like the cards you get, you don't get this money back. You have to manage the hand you have the best that you can. And trading is not too dissimilar. But it's I've spoken to a few people over the years who are good gamblers. They will routinely, you know, gamble $300, $500, $1,000, and yet they fret over putting $200 or $300 at risk. So very important. This has to be an amount that you are comfortable with. And in the same vein, try not to think of it as money. I know it's weird, but people, you know, when you attach a dollar sign to this number, you start to make some poor decisions. Phil Ivey, the poker player, you know, the guy's like 19 years old and he's playing the World Series poker championships. I remember him in an interview, he said, if I think of it as money, I'm done. So he's playing hands that are worth $200,000, $300,000, maybe $400,000. that kind of pales our little $300 bet, if you will. And they're playing real money, but he says, if I think of it as money, I'm done. I'm sunk. So the lesson from that is you have to be detached. That's one reason why people always ask me, hey, Eric, why do you blank out the P&L? They think I do it because I don't want you to see, you know, if I had a crappy day. No, that's not it at all. I want to make decisions based on what's going on the chart. I don't want, you think I want to see where was that trade up here in the Falcon? Do you think I want to see this number staring at me? Oh, it's 135 bucks. Okay, big deal, right? It's what we used to call a rounding error. It's not a real loss, it's a rounding error. But even so, do you think I want to see that? No. I want to be able to make decisions based on what I see in the chart. So if you gain the confidence in the signal, find the signals that work for you. Not every signal is going to be comfortable to take, you know, like these counter trend signals. I'm perfectly all right leaving the counter trend signals alone and looking for with trend signals. Look for those good setups. And then you have to become detached from your money. Prasanth says, thanks, Eric. It's the second part of your advice that is hard, especially when you place your first trade and becomes a loss. Okay, you have to, when you get a losing trade, try to figure out, what did I do wrong? All right, so here in my trade this morning. So I shorted like this, and I put my stop up here. Okay, folks, what did I do wrong? I'll wait for you Hunt and Peck typists to type out a short little answer here. What did I do wrong on this trade? Because I was right. I was right. What did I do wrong? Anybody? And while I'm waiting for, yeah, there you go, Julian, way to go. Yeah, Dan, nice call. Okay, my stops are too tight, right? I got tagged. Look, I got tagged for the sake of 2 or 3 ticks. I got tagged out before I realized a profit. So next time I think about taking a counter trend signal, maybe I'll offer up a couple more ticks. Maybe I'll go up here to the primary resistance line. Oh no, you say, I can't do that. I've got $250 at risk now. No, you don't, because your stop loss never got hit. Right? If your stop doesn't get hit, it's not a loss. So the last piece of advice is to get choosy about your trades. You know, for the benefit of those of you new in the room, you don't make money by trading more often. You make money by finding your best setups and then capitalizing on them accordingly. And how do you recognize the best opportunities? Well, again, you got to do your homework. You've got to gain the confidence in your signals. You've got to, look at your chart and be able to say, yeah, okay, this looks like an uptrend to me. The market's made a strong rally out of the open. Okay, we've reversed, and now they're trying to recover. We're making some little higher swings up. Oh, we're trying to make lower swings, and then we get our signals, and now I have to make a decision. If I think that's a good signal, then go ahead, set it up, give the trade a reasonable amount of room to work out. If the trade does not work out, well, at least you've contained your risk, right? We've contained our risk to an amount we can afford to lose, which should hopefully take a little bit of pressure off of your trading. But until you get past those things, until you get the confidence in your signals, until you can treat it like monopoly money instead of real money, it's going to be difficult. It's going to be difficult to be a successful trader, because that is your business as a trader, is to risk money. If you're a retailer, you also take risks, right? You buy inventory 4 to 6 months in advance and take the risk that somebody will actually buy it. That your market research was sound, and somebody will buy what it is that you chose to inventory. If you're a furniture manufacturer and you're building dining room tables, you're taking the chance, you're investing all this money in wood and labor and materials, and you're taking the chance that somebody's going to want to buy this dining room table when you're done with it. Well, trading is no different. You're risking money. It's like Ed Sequoia, the famous trader, said something to, and this is a very loose paraphrase, but if you don't want to lose money trading, stop trading. That's the only solution to losing money in trading. Stop trading. And this from one of the most successful traders of all time. So if he was prepared to lose money or accept a losing trade, I think you should be as well. Now we hit our good runs. I had a really good run. This trade this morning was actually my first losing trade since the beginning of the year, which, you know, it's unfortunate. I was hoping I could get through the month of January without a stinker, but that darn counter trend, I knew as soon as I took it, don't take the counter trend, Eric. Oh, well. But there's no, like I say, there's no excuse for practice and gaining confidence in your signals. Yeah, like Julian says, stop placement was one of her hardest lessons, cost her about $100,000. And that's, as a friend of mine likes to say, education is expensive. So, but Julian, you know, she learned the lesson. Trading is very much the school of hard knocks. So you're gonna learn things the hard way. And sometimes it's the most painful lessons that come home to you. Yeah, like Julian says, it was the best lesson ever. And I remember early on, I was the same. I kept my stops very, very tight. And a broker friend of mine said, Eric, leave yourself a looser stop. You're strangling your trade. Of course, I didn't listen. It wasn't until I realized that, you know, he was right, I was wrong, that I started to leave a more liberal stop. And what do you know? All of a sudden, my trades are working out. Really? I'm not losing money. Wow. Elmer says, Eric, I completely messed up my Raptor chart and tried to rebuild it, but did not get it back to how your chart looks. Could you go over your settings again? Sure. Okay, so I'm pretty much stuck on the default settings. So if you have a default template, that's the one you want to use. So the brick size, at least for the NASDAQ and most markets, will be 8 ticks. And then the Raptor itself, like I said, pretty much the default settings. So a 12 brick cloud, an 8 brick cloud, and a 6 brick hawk. And then down here with the soft edge parameters, that's the only one I've really changed. By default, I believe it's 1.01. And I've dialed it up to 1.25. For you new Raptor owners, the higher this value is here in your SE parameters, the more number 2 signals you will print, and the lower the value, the fewer number 2 signals you will print. Those are the counter trend. All right, so that's again an 8 and a 12 tick cloud and a 6 tick hawk, which are the default settings. Then when you have everything set up, if you don't already have a template, save it, so that if you mess up your chart again, it's a relatively simple matter to get it back. Okay, Jay, I'm going to get to your question in just a second. Dan, I think, was asking about the opening and lines that I have here. Okay, I've got this little dotted line on my chart to highlight the opening range. This is actually an add-on, Dan, and it's I will get you the information. Okay, so if you go to Indicator Warehouse and you search for the initial balance lines, that is the add-on I have. You can also check out the moon phase indicator while you're at it. The initial balance lines I have set just to highlight the opening range. You can highlight a lot of information with the initial balance lines, but the one I'm most interested in is just the opening range. So that's the little dotted green line that you see displayed. Jay is asking, is a number 3 signal after a 2 signal a higher probability trade? Yes, I think it is. I think that a number 2 signal, of course, is the counter trend. So the number 1 signal suggesting we've got a bullish trend building, then we've got a number 2 signal coming back, and then a number 3 signal on the heels of that. I think this particular setup right here, Jay, is a pretty good setup. Likewise, I think you're going to find that your number 2 signals after a number 3 signal are going to be a little bit more reliable as well. So here's another couple number 2 signals that, well, the hard edge is the target for the number 2, so that got very, very close. But here's number 3s right after the number 2. Let me find you a reversal signal, though. Boy, I really got to go back here a ways. The market's been in such a strong trend. If we have a number 3 signal that fails, okay, here we go. I guess that's the best I'm going to do. If we have a number 3 signal and then shortly after the number 3 signal, a number 2 signal prints, that makes the number 2 signal a little bit more viable. The number 3 signal is a continuation signal, right? So we need to have a trend, and then we need to continue the trend after we hit the hard edge. If the trend looks like it's faltering and no longer wants to continue, we're going to counter back with a number 2 signal. This makes the number 2 signal stronger because it's showing a trend that no longer wants to continue. So yes, I think the relationship between the number 2s and the number 3s does add strength to the validity of each of the signals. Julian asking, is there a way to not color the bars? Well, I know you can change the colors of the bars, right? If you're not a fan of the magenta and the Dodger blue, you can certainly change the bar colors. Oops, here on the Raptor, got to go down to the bottom. If you're just looking at a stock candlestick type bar, I'm going to have to refer you to Ben. So there's Ben's email. He's one of the programmers. He's the one who would be able to tell you I think you might be able to. I know some people, when they see the Raptor, one of the first questions is, can I change the bar colors? Yes. Yes, you can. All right. Okay. Time to get my head back in the game here. Looks like we've come back down to the hard edge here on the Eagle as well. Coming out of scalp mode, thank goodness. Moving into trend mode. And we're producing a hard edge bounce, so the Eagle looking a little bit bullish. The Raptor also continuing to look bullish. The Hawk and the Falcon actually a little bit bearish already, so we're getting a little bit of a mixed bag of information here. Just going back to the notion of limiting the number of times you trade in a day. Too many traders bring a production line mentality to trading, especially if they think they're going to be scalpers, which I always find amusing. It's, you know, like you're selecting, I'm going to be a scalper. Yeah, so I'm never, ever going to try to capitalize on a bigger move. Yeah, I'm only scalping. Well, they're scalping, of course, because they think it's less risk. What is less risk, though, is going in with the mindset that I'm only going to look for 2 or maybe 3 opportunities on the day. And if the market conditions are right, well then I'll take those trades. And if not, well then I'm going to wait. Waiting, I think, is probably the hardest part in trading. A lot of good traders are patient. Not so good traders, pretty impatient. That's another expensive lesson that many of us never learn. Oops, somebody's Skyping me. We do seem to be slowing the advance, don't we? We do seem to be struggling around the 69, 67 half zone. I'm not going to call it a top just yet, but the market has come down from this area, the 69, 64, 65 area a few times, which is where we find ourselves once again. Well, trend mode not lasting very long. Trade forecasts are saying we're in trend mode, but only for about 5 or 6 minutes, which is really just a little bit of a transition. All right, well, this looks like it might be a good time to go grab a cup of coffee. I will be right back. Excuse me for just a moment. Okay, so what did I miss? Well, not too much. A little bit of a macro pullback slash 4 arrow consolidation here in the hawk. The eagle signal still getting some decent follow through to it. And the Raptor number 3 signals getting some follow through as well. Dan is asking, lost power, had to reboot. Is it unusual not to see the same signals, i.e. I do not show the last number 2 trades? Is there a data difference? I also did not get the current number 3. All right, well, I have got 10 days of data loaded. And sometimes there can be a slight difference the way the data comes into your machine. Ben explained this to me once, and he got about a minute into it, my eyes started to glaze over. So it's a technical issue. If I refresh my chart, we'll see it's probably going to change some of the signals as well. Yeah, you see. So that's, no, it is not unusual. This is why it's important as well to recognize the signals even without the prompts, right? You need to be able to recognize the signals independent of the prompts. The prompts are there to help you, but you want to be able to spot them on your own as well. Yeah, Joel says you might try reloading historical data as well. All right, well, here we are, still very much in an uptrend. And the market is, still struggling with these recent highs, so I would not be opposed to a sell signal here, but once again, it's obviously counter trend. You don't want to go in heavy. If you're going to throw a couple of dollars at it, if it works, great. If it doesn't, you don't want to get clobbered because of it. We may have to wait a little while for a really good top to develop, but I could see a little short-term top coming in. Joel says, I'm seeing a 50% retracement of yesterday's daily candle in a lot of instruments. This is common behavior, but I haven't seen it in several days. If this is all we get, very bullish. Yes, very bullish indeed. Let's get the daily chart up here. So trading, good trading, I suppose, is to have a real good grasp of the obvious. A lot of times, you know, we're our own worst enemies. We start thinking, oh, the market's going down. There's been a few down days here, and yet if you compare the up days, you know, you see a lot of strength here, a lot of strength here, and you see some retracement to be sure, but look at the size of these bars relative to the size of the rally bars. And then, of course, big rally bars, and you get one or two bearish days, and all of a sudden everybody starts calling for a top again. And then what happens is you get more rally bars. So, yes, the market insanely strong. And to be fair, I think a lot of people feel it's overextended. I thought the same, but you can't argue with what the market is doing. You know, a lot of people will be drawing wedges like this, looking for bearish breaks, which tends to be the case. But the trend is up. There's no doubt about that. You can see even today, if you just bought any of the buy signals and ran a reasonable stop, you would have been in a fairly profitable position. Oh, okay, the exception right here. Because your stop probably would not have been deep enough to withstand that move. But any other signal, any other buy signal, you would have been doing okay. And as is the case with most things trading related, as Joel points out, it is until it isn't anymore. Yeah, like Frank says, stop trying to catch the top. very productive morning for me so far, but that's all right. Well, I'll get it back. Well, still watching and waiting. Joel says, top calling is a national sport. Yeah, I suppose it is. Okay, speaking of tops, the hawk now into yellow bars, and we're getting a soft edge sell here on the Raptor. This is, again, very aggressive. I think a second push entry might be the way to go. So the second push entry simply means we allow the signal to generate and we see where the market reacts. Then we place our entry below that reaction. So we're looking for some renewed momentum to bring us in. And we're right on the resistance line. I should have maybe entered just below the resistance line, but I'll leave it as is. I'm running, as you can see, a slightly tighter or wider stop than I did earlier. And the idea being, I'm going to give this trade a little bit more room. Yeah, Joel makes a good observation here, writes, the The rallies that no one believes in goes the highest. The ones that everyone jumps on fizzle out soon. A good trading friend of mine always put it another way. He said the big money is always on the surprise side. Actually, I'm going to stretch my profit target here a little. See if I can't get my earlier loss back, or if the market's just going to turn around and spank me here. Counter trend trades, I'm telling you, they are the bane of most traders' problems. If you get away from counter trend trades, you'll probably do all right. Well, there's no momentum in the market either. My goodness. Yeah, Julian says we don't have a failure yet. No, we don't. And yes, I'm being quite aggressive on this short. One of the bonuses, I guess, of being a trading room moderator. When things get slow, I can show you stuff that may not necessarily be the best signal, but at least it gives us something to watch. So we're seeing one more retest of the high. Hey, good to see you, Peter. Peter writes, good morning, Eric. Thanks to DTS, I get to spend a couple of months in Mexico. I haven't been in the room because it takes 3 weeks to get set up my internet. Anyway, I'm back, and go figure we're in a flat market, but I live by the motto, no more than 3 trades a day, so no trading for a few days until I get my feet wet again. Yesterday and today were actually pretty good days. Yesterday especially, the market very, very bullish yesterday. Today, we saw some decent moves, but overall, we're kind of sideways. Saw decent swings higher and lower, but not quite as smooth a progression as yesterday's trading was. Where in Mexico are you hiding out, Peter? Oh, I know. I'm getting a couple comments here. People saying, well, this number 2 signal, why would you take a counter trend in an obvious uptrend? Well, I guess I didn't make myself clear enough. I was just showing this because there was not really much else to show. It is a very risky trade when you try to counter trend in an uptrend. But I'm hoping that this time, if I keep my stops a little bit further away, I might actually be able to see the market head lower. Oh, how nice. Peter says he's in Merida in the Yucatan. Yeah, beautiful, beautiful part of the world. Good for you. Not too far from Cancun. All right, boys and girls, I think we're going to button up shop here for the morning. Things continuing to drift a little bit sideways. I think we're going to get a little bit of a pullback. I think a move to the hard edge is reasonable to expect. I don't think we're going to see a full-blown reversal here this morning. I think that's asking too much. But the buyers definitely slowing their advance. A little bit of a pullback. They may try to rally the market again afterwards. But I think more or less we're going to see the market drift in a sideways to up kind of fashion. All right, well, we'll be back tomorrow and do it all over again. I will talk to you then. Oh, Dan's asking, when does the recording appear on the website? It will probably be uploaded later today, if not tomorrow morning at the latest. Talk to you soon. Bye for now.